Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 4th, 2025, and we're diving into Kroger's third quarter 2025 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Kroger's latest financial performance and strategic updates.
Let's get started with a brief introduction to Kroger. As one of the largest grocery retailers in the U.S., Kroger has been focusing on expanding its e-commerce capabilities and optimizing its store operations. Today, we'll explore how these efforts have translated into their Q3 results. Revenue and profitability overview. Let's start with the top line. Kroger reported total sales of $33.9 billion for the third quarter, a slight increase from last year. However, they posted an operating loss of $1,541 million. John, can you explain the factors behind this loss?
Absolutely. The operating loss was primarily due to a $2.6 billion impairment charge related to their automated fulfillment network, which translated to a $3 loss per share. Despite this, Kroger's adjusted EPS came in at 105, slightly above the analyst forecast of 104, thanks to strong e-commerce sales growth of 17%.
That's interesting. So despite the significant impairment, Kroger managed to exceed EPS expectations. How did their e-commerce segment contribute to this performance?
The e-commerce segment has been a key growth driver for Kroger, with a 17% increase in sales. This reflects their strategic focus on digital transformation and improving customer experience, which is expected to make the e-commerce business profitable by 2026.
Operational efficiencies and future outlook. Moving on to operational efficiencies, Kroger's gross margin improved to 22.8%, with a FIFO gross margin rate increase of 49 basis points. What were the main contributors to this improvement?
The improvement in gross margin was driven by the sale of Kroger Specialty Pharmacy, better performance of their private label Our Brands, and lower supply chain costs. However, these were partially offset by the growth in pharmacy sales, which typically have lower margins.
And how does this tie into their future outlook?
Kroger has narrowed its identical sales guidance to 2.8% to 3.0% and raised the lower end of its adjusted EPS guidance to $4.75 to $4.80. This reflects confidence in their strategic initiatives and operational improvements, despite the challenges faced this quarter.
Capital allocation and strategic initiatives. Let's discuss Kroger's capital allocation strategy. They completed a $5 billion accelerated share repurchase program. How does this impact their financial position?
The completion of the ASR is part of Kroger's $7.5 billion share repurchase authorization, which demonstrates their commitment to returning value to shareholders. Their net total debt to adjusted EBITDA ratio stands at 1.73, indicating a strong balance sheet that supports further investments and shareholder returns.
And what about their dividend policy?
Kroger continues to pay a quarterly dividend, which was 35 cents per share this quarter. They expect this to increase over time, subject to board approval, reflecting their confidence in generating strong free cash flow.
CFO insights. Finally, let's hear from Kroger's leadership. CEO Ron Sargent emphasized the focus on customer experience and long-term growth. What are your thoughts on his comments?
CEO Ron Sargent highlighted the progress on strategic priorities, particularly in e-commerce, which is expected to become profitable by 2026. This aligns with their goal of enhancing customer experience and strengthening their core business.
And what did CFO David Kennerly have to say?
CFO David Kennerly expressed satisfaction with the momentum in e-commerce and pharmacy. He also mentioned the updated guidance, narrowing the identical sales range and raising the lower end of the EPS guidance, which reflects their confidence in the business's trajectory.
Key takeaways. In summary, Kroger's third quarter results show resilience despite significant impairment charges. Their strong e-commerce growth and strategic focus on customer experience are promising for future profitability. John, any final thoughts on Kroger's investment prospects?
Kroger's ability to exceed EPS expectations and maintain strong operational metrics, despite challenges, positions them well for long-term growth. Investors should keep an eye on their e-commerce developments and capital allocation strategies.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Kroger's performance in the comments below. Until next time.